Have you ever heard of the golden rule? Whoever has the gold makes the rules. I don't know if that statement is necessarily true, but in today's video, you're going to learn if you should be investing in gold right now. I am Tiffany Thomas with WealthyTiffany.com, and I achieved financial freedom at age 38. And if you are looking to achieve financial freedom at a young age as well, hit that like button and hit the subscribe button, and we are going to dive right in. First off, let's talk about just a couple of ways that you can invest in gold. You could buy ETFs, exchange-traded funds, that track the progress of gold bullion. And some of those ETFs are storing that gold in vaults in London. Just to give you a few examples, there is one called AAAU, which is Goldman Sachs Physical Gold ETF. There is another one called iShares Gold Trust, IAU, and then another is Granite Shares Gold Trust. And the ticker symbol for that one is BAR. Very clever, like a gold bar. Or you could buy the physical gold bars, the gold bullion, yourself and find somewhere to store that. I know people have stored their gold bars at a bank in a safe deposit box, so that could be an option. And there are other ways to invest in gold, but those are the two main ways I wanted to mention today. Now let's consider the reasoning why people actually want to invest in gold. For one, gold can preserve your wealth. You can use it as an inflation hedge or a deflation protection. According to the Bureau of Labor Statistics, inflation has caused prices to rise by 688% since 1970. Put another way, what would have cost you $100 to buy in 1970 now costs $788 in 2020. In 1970, the price of gold was about $35 per ounce. Its current value of $1,900 per ounce means that gold has risen by more than 5,300% at the same time. In that way, not only has gold kept up with inflation, but it's easily outpaced it. Now, what about deflation? How has gold performed during deflation instead of inflation? It is a hard question to answer because there's not been that much deflation in the US. But during the 1930s, the decade was known as the Great Depression. The price of gold rose from $20 an ounce at the beginning of that decade to $35 by the end. That means gold experienced a 75% increase in value even when general price levels fell. That means the real return was something greater than 75%. The increase was dictated by the United States government, which then kept the price locked at $35 until 1971. Gold tends to react well during times of inflation and deflation, but it's the times in between that it doesn't do so well. People might also invest in gold as a safe haven from geopolitical uncertainty. So when things are very uncertain, especially when it is out of the control of the United States, then things are very unstable, and that's when gold performs well. As we saw in 2020, the price of gold went from $1,520 up to $1,900. So it definitely increased during the time of instability. Some people may choose to invest in gold to diversify their portfolio. Usually when you're invested in stocks and bonds, they tend to move together, although stocks will be a lot more risky and you can see a lot higher return than with bonds. For example, bond prices rise on declining interest rates, but since fixed income investments compete with stocks, declining interest rates are also seen as bullish for stocks. Not only does it make stock returns more competitive with fixed income investments, but lower interest rates also mean companies can borrow at a lower cost. The result is both stocks and bonds rising at the same time. By contrast, when interest rates rise, it usually hurts both stocks and bonds. Gold often, but not always, moves independently of traditional investments like stocks and bonds. While stocks and bonds may cause both declines in value on that instability, gold often thrives on it. A small position in gold can offset declines in traditional asset prices. And the last reason I want to mention that people may invest in gold is that it can be a counter to the US dollar. As we know, back in the day, gold was actually used as currency, but now we've switched over to the US dollar. But if the US dollar is weakened, investors look for different currencies, and one of those could be gold. All right, now that we've talked about a few different reasons why people would want to invest in gold, let's talk about a few reasons why people would not want to invest in gold. One of the reasons people may not want to invest in gold is that cash is much safer and it's more liquid. You can't pay your bills or fill up your gas tank with gold, unfortunately. So people usually opt for the item that is more liquid. Cash also has a major advantage over gold in that it doesn't fluctuate in value. Yes, cash does lose value over time due to inflation, but in the short run, which is when cash is most important, it tends to hold its value at least in nominal terms. That can make it a safer short-term investment than gold. There's still another reason why cash may be the better choice, and it has to do with investing. During times when the financial markets are in decline, it becomes important to accumulate cash. When the stock market begins to hit bottom, that's the very best time to begin buying. You'll need cash to do that since you can't buy stocks with gold. Another reason people may not want to invest in gold is because of the wide price swings that gold has. Historically, the price of gold has been anything but stable. It has a long-term pattern of sharp upward price spikes, followed by gradual declines and multi-year stagnation that casts doubt on its place as a long-term investment. You can see the wide price swings of gold in this chart. For all its virtues, gold has a long history of being incredibly volatile, and that's the reason it should never occupy a large position in your portfolio. Another reason we may not want to invest in gold is because most forms of gold ownership do not pay dividends or interest. It doesn't offer a steady income payment, which is very unlike dividend-paying stocks or fixed income investments that pay interest, like bonds. With gold, the main benefit is to see the price increase over time so that you can sell it for a higher price later on, and it doesn't provide any type of income along the way. So if it doesn't go up in price when you are ready to sell, then you have lost a lot of your money. If this makes sense to you, then put in the comments making sense so I know you are following along. The last reason I want to mention that people don't invest in gold is because you're not investing in something that is creating wealth or providing value. When you invest in bonds, the owner of that business is going to use that money and grow its business. And the same when you invest in stocks, they are going to provide value and continue to grow their business over time, increasing that price of the stock. And the businesses aren't only providing value in what they sell in their products or services, but they are also providing jobs to people. None of that happens when you invest in gold because it's just something that is sitting there and you're hoping it increases in value. There are some exceptions to this, but it is not the norm. Tell me in the comments, what did I miss? What other reasons would people want to buy gold or not want to buy gold? I want to know what your thoughts are, so tell me in the comments below. As we've shown, gold performs well during inflation and deflation, but in other times it doesn't perform so well. And as we can see right now, we tend to be in the inflation part. So gold could be a good investment. And that being said, please do your own research, and I want you to know why you are investing in gold. Is it one of the reasons I mentioned, or is it something else? For me personally, I'm not investing in gold right now because I want to grow my wealth. I don't want to just preserve my wealth. And to go along with that, I don't want to be responsible for holding the physical gold bars. So if I was to invest in gold, I would probably choose an ETF. I invest in the stock market in individual stocks and also in index funds. You can find out my favorite index fund in this video here. I will leave a link below in the description and up above. And also I invest in real estate. And if you're interested to know how I've invested in real estate, I have a video for you. I'll leave a link to that above and below in the description. You can check that one out later on as well. Gold is not a foolproof investment as with stocks and bonds. Its price fluctuates depending on a multitude of factors in the global economy. Over the long run, however, both stocks and bonds have outperformed the price increase in gold on average. So if you are keeping that long-term mindset, gold may not be the best investment for you. Nevertheless, over certain shorter time spans, gold may come out ahead. The bottom line is, if you do end up investing in gold, I would keep it a small percentage of your portfolio just because of what we have seen happens to the price of gold over time. And if you're thinking, I don't really want to invest in gold after watching this video, but perhaps you want to get started in the stock market, you can get 2 free stocks right now. Webull is giving away 2 free stocks when you open a free account and deposit at least $100. I will leave my referral link below and you can get your 2 free stocks. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel, and hit the little bell to get notified on when I post new videos. And if you want to see even more content from me, check out the videos on the sides of the screen over here. Thanks so much for watching. I'll see you in the next video.